Good morning, my Teaserking family. How is everybody today? I am fine. I was just watching some Mcgwire, Egon, and some things on Bitcoin. Gold, you can see, is 32.72. It's the end of the month. It's all fixed. It's all planned. It always happens near the end when they reset everything. Not to worry. We're still $5,000 gold. This is just being played. I watched Mark Mcgwire. He says it's mostly like Citigroup Bank who is shorting it, and then everybody else is saying no, they're full of shit, and they're going along with it. As we see, silver is 36.15, so silver's holding in there. Gold, they're just they're doing the silver with, but it's fine. 32.72. Again, down 60, and everybody goes, oh, gold's down 60. What's going on? It's paper gold. It's all derivatives. It's all options. It's not real. So, anyway. That's what's going on. I'm waiting to hear from Daria about Alina, her daughter, and so far nothing. She was supposed to come home from the hospital today, so I'm waiting to hear that. Okay. So gold, what's going on? We know it's not a free market. We know it's not like Canadian Club. I put it out and somebody buys it. I put it out. Gold and silver are controlled by the bullion banks on COMEX and the LBMA, London, whatever, metals exchange. And basically, we understand that, but what's been happening on our side is BRICS buying physical gold, Shanghai, China, Russia, India, Saudi Arabia, Brazil. They're all buying physical gold, and COMEX is drying up and will be gone very soon. And so they're trying to short gold. I don't know why. It's the stupidest thing. I don't get the prices. I assume Citibank is probably trying to buy physical at a cheaper price, would be my guess. They've missed the boat. They should have been buying as we were buying at 1,800, 1,900. So that's what happens. But Goldman Sachs said $5,000 gold or 4,500. And Citicorp wants it to go down. So Citicorp's missed the boat. Anytime you see gold and silver going down, and silver's not going down, it's still 36. Anytime you see gold going down, it's because people want to buy it. When you're fixing the price, and you got to look at who benefits. Who benefits from gold at 3,100? Well, people wanting to buy it. People who have it don't benefit from a lower price. And you're not making, I don't know how much you're making on options, but that's still in US dollars. So you're still fucked if you buy, even if you're playing options and ETFs, you're still in US dollars. You must get out of that. We'll come back around to that, but I just want to reassure everybody, don't worry about your gold going down a little bit. It's always the time to buy. It's always at month end, but we got Basel III July 1st, which is 28th, 29th, 30. So that's Tuesday, I believe, if there's not 31 days in June. So at that point, you will see, you should see a big increase in both gold and silver. As now it's Basel III, which means they have to cover it. So when people do an option, they can say, I wanna settle it in dollars or settle it in gold. And everybody wants gold. Nobody wants dollars. It's amazing how nobody understands inflation except for us, because it's really only the Austrian economists can understand inflation, right? We understand it to be money printing, which makes the dollar worth less. It's as simple as that. But people who aren't trained in Austrian economics don't really understand that. They think inflation is prices. So they don't connect the two. They'll go, oh, well, there's inflation and then there's devaluing the dollar. That's the same thing. Excuse me. And so when you hear people talk about inflation and devaluing the dollar, they don't know what they're talking about. So when you print more, it's worth less. Excuse me. I mean, that's how obvious it is. That's what's going on. And the only way out is to buy gold and silver, because you can't print it. You can't inflate it. I'm watching this thing on a Bitcoin guy, and the guy's just so clueless. I don't remember his name, but he just doesn't get it. He doesn't, he keeps talking about we're going to keep printing pay. He gets that I think the Bitcoin people get that the dollar's worthless, but I don't know why they think Bitcoin has a value. They'll tell you it's limited, but they can't prove it. We know gold's limited. It can only come out of the ground. You can't print it. Can you copy Bitcoin? Probably. But it isn't money. So I'm about halfway through with that. I'll talk about it tomorrow. So $32.75. We're coming back. But Friday the market closes. We'll be close to 3,300. Silver 36.15. All right. So again, people just proving dollar just proves our point. We know the dollar's not worth anything. We know it's just money printing. And it was tied to gold, which was a good thing. The kid doesn't understand that. The market's up $400. Again, you've got to be, it must be the 401ks flowing in from all the people who are dumb enough to get into 401ks. All right. So let's go to baseball, and we'll get back to economics. Baseball, I've kind of condensed my picks into just the ones that make sense. There'd be a lot of ones that I wouldn't, not sure the pitcher, not sure they're hitting or whatever. We have stumbled onto the Yankees under 11 games in a row now. So we're hammering that. Yesterday I went 4-0 in my picks. Minnesota over 8, 2 units. Philadelphia under 7, 5 units. The Dodgers 3 units, and the Cubs under 9 for 2 units. So I went 4-0 yesterday. So I'm 6-2, 3-0, 4-1, 6-2, 4-0 for the week, which translates into 5 losses and 9, 10, 13, 19, 20. So 23-5. So now I think I've pretty much figured out baseball. Once we have the pitchers, and we got to see Verlander's back, Scherzer's back, Kershaw's back. If they're going to be studs, that's who you're betting on. You're betting on Joe Montana. You're betting on Tom Brady. Those are what you're betting. right? You're betting on the Stars, and that's what you do. You don't. You just don't mess with the higher risk. Why play higher risk? You get the same reward. So anyway, it was a small schedule yesterday. We did hit 4. The Tigers, we didn't play. They lose 3-0 the game before, and then they win 8-0. So they go from losing 3-0 to winning 8-0. No idea. This is the problem with them, and they're all sign stealing again. So it's just pathetic. Very weak team. If they couldn't sign steal, they wouldn't be able to hit, and then they'd be where they should be. So it's easy to have a bunch of 280 hitters when you're stealing sign, when they know when a curveball is coming. Well, the guy was good at it. He stole signs at Houston. He's doing it again. All right. 6:27. Now we'll continue with what we've been doing. The Mets at Pittsburgh. David Peterson 5-3 with the 2.98 against Mitch Keller. 1-10 with the 4.02. So we're going to take the Mets. Now we're only going to take games that we're betting on. So there's not going to be that. So we'll go with the Mets. 2 units with Peterson. Oakland and the Yankees. Mitch Spence 2-2 with the 3.84. Will Warren and over under of 8.5. So we're clearly taking the Yankees under 8.5. They're on an 11-game under streak. We'll go 3 units here. This is basically what you dream of, a streak that keeps going. It's in New York. Will Mitch Spence is 2-2 with the 3.84. Should be hard to hit. Will Warren. Oakland got shut out by the Tigers. So again, it's 8.5, and we're going under. Tampa Bay and Baltimore. Ryan Peapot 5-6 with the 3.04 against Takami Suganana. He flew suicide bombs in World War II. 5-4 with the 3.5 and 5-6. Tampa's got a pretty good team. I'm going to stay away from this game. I don't like it. San Diego, Cincinnati. Dylan Cease 3-6, 4.43. Nick Martinez 4-8 with the 4.44. San Diego 135-9. Cincinnati can really hit the ball. San Diego, they must have injuries because they had a lot of good hitters and now they don't. Dylan Cease I like. Nick Martinez 4-8 with the 4. I don't love San Diego in this game. I really have a hard time with the under. So I'm going to pass on this, even though I like Dylan Cease. Cincinnati's a real good hitting. Cincinnati, you kind of want to play over games. You're not going to get maybe an over game with Dylan Cease. Minnesota and Detroit. Detroit again. Who knows? Minus 125, 8.5, and we don't have the pitchers. We'll see. Should be a pretty good game. All Detroit's caring about is winning series. I thought I was out winning games, not winning series. Really stupid. They're not that good just because they have a good record. Their schedule is terrible. So, again, they just played they got buried by Tampa. They got buried by Cleveland. And then yesterday was Oakland. And today's Minnesota, 39-42. So they're playing a bunch of crap teams, just like the Lions. All right, but we don't have pitchers, so we got to pass. St. Louis and Cleveland. Sonny Gray, 7-2, 3.72. Luis Ortiz, 4-8, 4.3. I don't like it, so I'm not going to play it. Sonny Gray could. See, this is where I get in trouble. I play this game, and then I guess, should I play over or under? Well, I'm taking all that out of it. I'm not even interested. Sonny Gray, 3.72 could shut you out or give up 5 runs. Toronto and Boston. Toronto 105, 8.5. Jose Berrios 3-3 with the 3.51. Brian Bello 3-2 with the 3.31. Dare I go under in Boston and Fenway Park? Absolutely not. I got a bet over there, and Berrios and Bello not. They're both 3.5 ERAs. I'm going to pass. Philly, Atlanta. For Philly, Mick Abel 2-1 with the 3.47, and Bryce Elder 2-4 with the 4.77. I don't know what you do here. Good series. It's in Atlanta. Atlanta's a big favorite. I don't know why. Total of 9. Maybe we get runs. Philly's not been hitting. We had Philly under 7 or 8 yesterday. It was under 7, 5 units, and we won it. So Philly's not hitting. Atlanta, I don't know. Frisco and the White Sox. Frisco 160-9. Landon Roop 5-5 to 3.67. Aaron Chevalier 1-4 with the 5.03. I don't like this either. The Niners don't really score a lot, and the White Sox have a lot of shit. I think they brought up some hitters who are doing well, but we'll see how that goes. But no interest. Seattle at Texas. Seattle 118, 7.5. Logan Gilbert 2-2 with 3.12. Nathan Evaldi 4-3 with the 1.56. So we will go under here. Texas under 7.5, and therefore it'll be 2 units. Evaldi 4-3 with the 1.56. So they're going to have a hard time scoring. But Gilbert with a 3.12, I'm not sure Texas can hit. So therefore, it becomes you go over or under, and you got to go under with the 1.56 pitcher who's 4-3, so he's pitched a lot. The Cubbies at Houston, very good series. Cubbies 105, 8.5. Cade Horton 3-1 with the 3.70 against Brandon Walter 0-1 with the 3.80. Too much risk in Walter 0-1 with the 3.80, and Horton with the 3.73. The game's at Houston, probably goes over, but this is not against these pitchers. They both could shut you out. Colorado, Milwaukee. Colorado 18 wins. They might get to 20 this year. Milwaukee minus 228.5. Kyle Freeland 1-8 with the 5.13. Jose Quintana 5-2 with the 2.9. Let's look at Freeland. I thought he had like a 7 or an 8 ERA. And let's see. I hate when you're about to hit it and the screen adjusts. All right. He was on the 15-day DL. That was a while ago. I don't know when that is, or maybe he just got off of it. Yeah. So his last game was June 11th. So he's coming off the DL. His last 5 games, he gave up 3 runs to Frisco, 2 runs to Miami, 3 runs to the Mets, 8 runs to the Yankees, and 1 run to Philly, 3 to Texas, 9 to Detroit. So he's very inconsistent. Not what we want. Look at Detroit, 3 innings, 9 runs. See, they're obviously stealing signs. Then you go 6 innings against Texas for 3, but here you go 5 innings against Philly. They got 1 run. And then you got the Mets 6 innings, 3 runs. Miami 6 innings, nothing. They can hit. So wait a minute. Against Detroit, it's 9 runs. Oh, is that because they're stealing signs and nobody else is? See, that's where you tell they're stealing signs when they get 9 runs off this pitcher. But nobody else does. I mean, 2 runs and 3 runs. So Detroit definitely stealing signs. Keep that in mind. But it's okay. We can bet them over. But then even then, it doesn't help. So Freeland's coming back. I don't know what to do with him. Jose Quintana is 5-2 with the 2.98. Looks like we want to bet Milwaukee. So let's go with Milwaukee for 2 units. And we will see. They're at home. Colorado, I don't know. Again, Freeland's been off for 15-day DL. The Dodgers at Kansas City, good series. The Dodgers 155, 9.5. Dustin May 4-5 with the 4.46. Noah Cameron 2-3 with the 2.08. So good ERA. Dustin May, I have no idea. 4-5 with the 4.46. Average pitcher. The Dodgers, you don't know if they're going to hit or not. I'm going to pass on this game. But I do notice the Dodgers with 51 wins and Detroit with 51 wins. Oh, my God, they're not the best team in baseball anymore. What will they say on the radio? Oh, they'll probably be crying buckets. Oh, look how good we are. We're as good as the Dodgers. But we have to cheat to do it. But, hey, everybody cheats, right? Washington and California. California 178.5. California's gotten better. They're 40-40. Washington's 33-48. Jake Irvin's 6-3 with the 4.18. Jose Soriano 5-5 with the 3.39. I'm not touching this. These are the games that get you in trouble. What do you do with the 4.18 and the 3.39? Do you think it's going to be low scoring or high scoring? And that's the problem. Oh, I'm going to go over, and then it's a 2-0 game. So these are the games we're avoiding. And our last game, Miami at Arizona. Interesting. The California game is 9:38, and the Arizona game is at 9:40. What the fuck are they doing? Arizona minus 185, 8.5. Yuri Perez 0-2 with the 6.17. Merrill Kelly 7-3 with the 3.39. It's probably an Arizona bet. So let's go Arizona. Well, let's look at Merrill Kelly 7-3 with the 3.39. Is it real? Let's look at his last 5. Gave up 3 runs. Gave up 4 runs against San Diego, and then a shutout to Seattle and Atlanta, and then 6 runs to Washington. This guy's all over the place. 4.6, 0.0, 4.3. What's it going to be? You don't know. All right, so we'll scratch Arizona. So at the end, we've got 4 plays. We took the Mets, 2 units. The Yankees under 8.5 because they're on a 11 or 12 game under streak. We'll go 3 units on them. Texas under 7.5. 2 units, and Milwaukee 2 units. Now we hit our big lock, the biggest lock we had all year. The Yankees under 9.5 when Max Fried pitched, and they won like 7-1 or something. So that's really where you want to lock it. Verlander getting better. At least he's back to pitching. Scherzer's back. And really, that's even if you don't trust Verlander and Scherzer to win, you can trust them to pitch and keep the score down. I would think some of these teams are used to them stealing signs. Like Verlander would be wise to it because he used to stole signs. So we'll have to see. Anyway, so that's baseball for today. There's no basketball. Let's check football. Any news? Like I say, the difference is baseball's every day, so you're really not sure what you're getting. Any news? Off-season power rankings. What is that? You think that? How can that be real? Saints rookie quarterback, how confident he can start, not going to phase me. Yeah, I don't think so. He was good at Texas Tech, but then what happened? And then he went to Louisville, and he wasn't that good. Justin Tucker gets 10-week suspension amid sexual misconduct allegations. Rodgers knows he's almost done. Will he be able to go out in style? Sure he will. John Harbaugh and wide receiver Devontae Walker, all he does is show up and go, whatever. What do you think John Harbaugh is going to say about his receiver? The Buccaneers signed Todd Bowles and GM John Lick to a multi-year. Todd Bowles stinks as a coach. Chiefs strategy to expand UK fandom. Why? Cultural connections and mascot. Why do we need to be in the UK? Seahawks bring back veteran cornerback Shaquille Griffin, whatever. Colts have more uncertainty on Anthony Richardson. Well, we'll get that when we get closer to the beginning. Can the Patriots maximize their remarkable offseason? Oh, they had a remarkable offseason. Did they win any games? The Raiders just want to start winning again, baby. Well, they've never stopped trying to win. Here's where they try to scam you. NFL betting over-unders for all 32 teams. Says from whom? Yahoo Sport. What, does this guy know anything? This is the problem. You listen to a guy who has no idea what he's talking about. And what are you going to make bets off of it? Just save your money. Wait for the teasers. 25 Denver Broncos fantasy preview, whatever. Russell Wilson's negotiating with Broncos, revealed strong. He's on the Giants. Russell Wilson's negotiation with Broncos revealed strong evidence of collusion. Whatever. Yeah, there's no collusion in football. All right, let's go through the lines one more time just to see them. I hate. All right. Philadelphia 7-46.5. The game's in Philly. They get their rings, which really neutralizes a lot of it. But Dallas is so bad that they should pound them. See, defense always shows up. The quarterback sometimes doesn't. Defense does. Friday night game, Kansas City and San Diego in Brazil. KC 2.5, 45.5. You can still get over 3 with KC, or you can still go under. Then we get this Sunday. We got Tampa Bay and Atlanta. Tampa Bay 2.5-point favorites, 49. Why is Tampa Bay favored in this game? It's at Atlanta with Michael Penix. They've added the 2 rookies, the kid from Georgia, the kid from Tennessee, who are very strong pass rushers. Why are they favored? I don't get it. Atlanta should be a 3-point favorite there. Cincinnati, Cleveland, Cincinnati 5.5, 44.5. Joe Burrow, they are not going to start 0-3 this year. Miami and Indy, especially if Prime Jr. is a starter, we're going to bet a ton on Cincinnati. My guess is it'll be Flacco the first 2 or 3 weeks, and then you need to go to Dylan Gabriel. He's better than Pickett, and he's much better than Sanders. Flacco you got for the experience. So maybe it's Flacco, give Gabriel 2 or 3 weeks, or put him in the third quarter or something. Miami, Indy, Miami 1.5, 46.5. Again, we don't know if Richardson's playing or not. I think this spread changed. I thought Indy was favored. Yeah, Indy was a 1.5-point favorite. So now Miami's gone 1.5. So now we still want the dog. If Richardson's playing, we go over. If he's not, I don't know. I'm not taking Miami on the road. Oakland, New England. New England 3, 42.5. That hasn't moved. Oakland looks for Gentry and Brock Bowers. They got Coach P, Geno Smith, who's average, not really good, but I don't know. He can hand the ball off to Gentry. Arizona, New Orleans. Arizona 642.5. We got to see who the New Orleans. We hope it's Jake Haener. He's the better quarterback. If they go to, they're stupid if they go to whatchamacallit on the Tyler Shaw. I mean, if they go to him and start him, okay, I get Rattler sucks. I get Carr's injured, but why would you not go to Haener? Excuse me. And that's the problem. They go to guys because they're fast, but not because they're winners. Haener's a winner, right? I'll never forget the UCLA game. He gets hurt. He drives them down and throws a touchdown with 5 seconds left to beat UCLA a couple years ago. That's what you want. He's the winner, but no, but he can't run a 4.5 40 or whatever. We need Lamar because he's fast. Yeah, but he can't hit the broadside of a barn. Yeah, but he's fast. All right, so let's see who New Orleans quarterback is. I don't buy Arizona 6 points over anybody. New Orleans is not that bad, although their coach sucks. It's amazing how they hire coaches. I was reading something yesterday when I was doing my ACC, and there was coaches in there that I said this guy should be the head coach of a lot of pro teams. I don't remember which team it was, but you got to be kidding me. Pittsburgh at the Jets, Pitt 39.5. Why is the spread so low? Now that we know Aaron Rodgers is playing and the Jets have whom? Fields. I mean, this isn't even close. Fields, give him 3 turnovers. Aaron Rodgers should be good. I mean, again, nobody's like he did his Achilles, and nobody's he had 2 bad years at the Jets. No, he got hurt week 1 and didn't play the first year with his Achilles. What the fuck you talking about? Last year he started playing better. He had Devontae Adams, and they had a coaching problem, and they didn't really have running. So you can't blame Aaron. It's Aaron Rodgers' fault that the Jets suck. No, it's the Jets' fault they suck. So I don't know if the Jets will win a game this year. Maybe if they play Carolina or Tennessee. But Pitt 39.5. You got to love Pitt in this game. The Giants in Washington 746.5. Jalen Daniels, and there's a W. Now, I think we can get an over on this game. It's only 46. We can go to 40. You've got Scatterboo now in the backfield, and you got Russell Wilson as quarterback, and Neighbors is the receiver. They should be able to generate points against a weak defense like Washington. However, you're not stopping Daniels. I mean, he's going to have a field day against this weak Giant defense. So look for this to get to be a little higher scoring. You just hate that week 1 because they don't play preseason anymore. It's just really stupid. I think Washington wins, but I think we'll get some points. Carolina, Jacksonville, the game of the week. Jacksonville, 2.5, 46.5 at home. They stink. Trevor Lawrence sucks. The number 1 draft pick's a joke. You don't draft a receiver with the 3rd pick. Carolina, however, is much worse than Jacksonville. Steve Young is terrible, and their defense sucks, and they don't have a running back, and their coach sucks. And Jacksonville is not much better. So I think this is 2 terrible teams. I think you go under because I don't know where you're going to get offense with these quarterbacks. They both suck. Tennessee and Denver. Tennessee might not win a game. Denver 7.5, 41.5. You got to love Denver at home. Bo Nix, you've added a running back. You've added some receivers. You've added some defense. They don't lose at home. And Cam Ward, he's just going to, step off the boat and go win at Denver. Yeah. Do they have receivers? Not that I'm aware of. Do they have running backs? Not since they let Derrick Henry go. Is Cam Ward a good quarterback? Not that I saw at Washington State. Miami runs a wide open offense, so of course he looks better, but that's bullshit. That's like Alabama, like just having this wide open offense, and you think all the quarterbacks are good until you realize that the wide receivers are wide open, so he looks a lot better than he is. And as soon as you start blitzing him and cover the receivers in the NFL, he doesn't know what to do. So you got to love Denver in that one. Frisco, Seattle. We got Frisco 1.5, 45.5. I think that's a joke. Frisco's got McCaffrey back. We got some receivers. They got Purdy. They've added defense through the draft. And they're embarrassed after playing as bad as they did. Seattle, you got Darnold. You got rid of Metcalf. You have no receivers. You do have the running back from Michigan State. Not much in defense. The coach sucks. I mean, the Niners, better coach, better quarterback, better players, better defense. And I'm only laying 1.5. Wow. The Rams, 2.5, 45.5 against Houston. Houston, strong defense. CJ Stroud is not the answer. He scrambles around. The Rams will be very tough on him. The defense will be tough on Stafford, but you got Devontae Adams and Pukanuka who will be wide open a lot of the times. They've got some running, and they've added to the defense last year and this year. I think it'll be a low-scoring defensive struggle with Houston. They're not going to light it up unless they get a lot of defensive touchdowns. So I'm scared to take Houston at 8.5 against the Rams. I think the prudent play here is under because Houston with this strong defense and the Rams defense isn't bad. I'm scared to take the Rams to win because of Houston's defense, but I think plus 3.5 you can go Rams. Baltimore Buffalo, very good game, Sunday night game. Buffalo 1.5, 51.5. There's only one way to play this game, and that is over. Lamar still can't hit the broadside of a barn, and Josh Allen is okay, but he wants to run too much. Both very good offenses, very weak defenses. Yeah, I know Baltimore just added. That's how bad Baltimore was. They had to add the guy, Jameer Alexander from the Packers, but that's not going to help them here. Look for a pretty high-scoring game. Again, you got that week 1 stuff, but we'll see. But I think the best way to play is over. You can bet Baltimore, but Buffalo plays very strong at home and could easily blow them out. But there will be a lot of points. All right. Green Bay, Detroit. Green Bay 1.5, 49.5. Detroit is a dog. Depends who they're playing. Green Bay, I think, is a weak favorite here. Detroit's defense sucks. Green Bay's defense, Detroit's offense, we got to see what the new coordinator is. But I would think if I was golf, I would just say fuck off and just call the plays we used last year, and everybody knows them. I think Detroit scores because I don't think Green Bay can stop them, but I think Green Bay scores on Detroit. I think this is a good over bet. Do you want Detroit as a dog? Probably, because Green Bay, I don't see Green Bay blowing out Detroit. And our last game is the Bears at home, laying 1.5, 44.5. I wouldn't lay 1.5 if they played Ohio State. I would take Ohio State. Caleb's terrible. Oh, he's learning how to watch film. Really? The coaches didn't teach him how to watch film. Lincoln Riley didn't teach him how to watch film. Bullshit. Caleb's all excited because they added Case Keenum. Here's how you watch film, Caleb. You turn on the projector and you watch the games. Are you serious? That's how bad this guy is? You made him the number 1 pick. Jalen Daniels knows how to watch film. Michael Penix knows how, and apparently so does Bo Nix. But Caleb didn't learn at USC with Lincoln Riley. Bullshit. If Caleb couldn't do shit with Lincoln Riley, what's he going to do with this guy? The problem with Minnesota's J.J. McCarthy's not very good. Hands off a lot. So if they're going to run a lot, although you got Jefferson, so you're fucked. He's injured. So did he 100% recover mentally and physically with the knee that he had hurt at Michigan? He had a knee problem. So I'm not really sure that I would bet McCartney doesn't go 5-6 games and he'll get hurt again. Caleb's terrible. They both have strong defenses. So in the art of war, the strength of both teams are the defense, and Minnesota with Jefferson. So Minnesota better bring in a good backup quarterback because McCarthy's no way going to go the whole year. Caleb sucks, even with the new coach. I mean, it's different coaching the Lions when they had 2 good backs, 2 good receivers, and a good tight end, and an average quarterback and a good line. The Bears don't have a good line. They don't have a good quarterback. They don't have running backs, and they have 1 receiver. So I'm not sure that the Bears he'll be able to run that type of offense, and it'll work for the Bears. I think you play the game under. You have 2 terrible quarterbacks, 2 very strong defenses. So maybe they run the ball, more, but I think this is a very good underplay. So that is the NFL. Questions, comments, please feel free. All right, let's go to Egon first because this is a little short. I have two Egons. This one's 2 minutes and the other one's 8 minutes. So let's watch the 8-minute one. Well, I guess we can watch let's go to the 2 and then the 8, and then Mark Mcgwire will watch some of his.
So we're talking about the devaluation of currencies and the consequent rise of the price of gold. Now, there is 500 Swedish kroner, currency that has lost most of its value since 1971. It's lost 99%, like most other currencies. And here is an ounce of gold. An ounce of gold cost in 1971.
They don't have Swiss gold.
The gold window cost $35. Today, in 2025, this ounce of gold cost almost $3,500. $35 to $3,500. Does that mean that the price of gold has gone up 100 times? No. It means that the value of your money has gone down by 99%. And as I've said many times, we're now in the acceleration phase of the decline of paper money. And we are going to see money printing on a scale that the world has not seen before because of all the problems in the world, deficits, debts, bubble assets. Add to that geopolitical problems of a magnitude that is actually very, very dangerous and precarious for the world. And on top of that, we have political leaders all around the world, in the West especially, that haven't got a clue how to solve this problem. So please stop holding paper money. Stop holding paper assets that will fall by 70 to 99% against gold in the next X years, whether that's 1 year or 5 years or longer. It doesn't matter. The risk is here and now, and it's now that you need to protect your assets and think about wealth preservation. Obviously, you should hold gold or silver, which is also very good potential now of appreciating, probably faster than gold. You should hold gold and silver outside a fragile banking system because that's the system you're protecting yourself against. So please, for yourself, for your family, now start thinking seriously about wealth preservation and don't hold your assets in fiat money, paper money. Please protect yourself, protect your family, help your friends by having your assets in real money, in gold. Gold is nature's money and the only money that has survived.
Because they can't. So the first thing he says is gold went from $35 to $3,500, let's say. That's not 100%. That's like 100,000%. 100% would be gold going from $35 to $70. So every 35 is 100%. So Egon's missing the point. Did gold go up? So let's argue this point here. How did gold go from 35 to 3,500? Or today, 3,300? How did gold do that? The dollar going down? Okay, but then why isn't silver? Why didn't silver go? What was silver, like $5 in 1971? So why didn't that go to $500? So he's trying to say it's the money that's losing value. Gold isn't going up in value, and I call bullshit on that. Gold is exactly going up in value. It does. It's a 1 ounce is 1 ounce. Nobody's arguing that. It's still 1 ounce of gold. So it's not like tuna where it's a 6 ounce can and now it's a 4 ounce can. We have gold at gold's going up. How do you say it's the dollar going down? I mean, it's really the dumbest argument I've ever heard because him and the alligator, they all talk the same thing. And they're all wrong. I mean, how many times do I got to correct these geniuses, right? So it doesn't make sense that I think if Pepsi, Coke's $3.65 a 2 liter, is that the dollar going down or the Pepsi going up? Well, it's still Pepsi going up. It's because the dollar's going down. It's because of the inflation, losing value of the dollar. We get that. The dollar is losing value. But at what point, if it's lost 99% of its value, so 100%, gold should be $69 because 100% would be 35 to 70. And yet we're at 3,300. So yes, it's a lot of buying, a lot of the bricks that have made the gold go up, not the money going down. That's an absolute bullshit, wrong statement. It's like when Alligator says it's China's not buying gold, they're selling dollars. Well, what are they doing with the dollars? Buying gold. So why do you say they're not buying gold? They are. So these guys use a lot of terms that make no sense. They're just they say it, but they don't understand what they're talking about. Gold's going up because of BRICS, because of demand, and all the central banks buying it. That's why gold's going up. They haven't started buying silver, and then you got Citibank and these other banks kind of shorting it because it's still a paper market. It's not a physical market, which is absolutely ridiculous, but that's about to break July 1st. So this is always the argument I have. I agree with the wealth preservation. You have to sell your dollars to get something. You can buy Rolexes, you can buy mantle cards or gold and silver. You need to buy real assets that won't lose their value. I agree with that. Is Rolexes going up because the dollar is going down? I don't know. I see expensive Rolexes, but I don't know if, that's the question. How do you value if the dollar's going down and the price goes up? It's all the same, but the amount that the stuff goes up, that's where I'm arguing. I know the dollar's going down, so it takes more dollars to buy gold. I'm the one who created that argument. I had that argument in 1995 when I graduated, and I says it's not because the gold's still an ounce. That was my argument I first used. It says gold was $35 an ounce. It's still an ounce, but now it costs $2,000. So it's clearly the dollar going down. However, at what point does the dollar go down, create gold to go up? And at what point does gold go up because of demand? So my argument with Egon and Mark Mcgwire and Alligator is the same argument. You can't say that gold hasn't gone up in value. That's bullshit. Gold's down $50 today. Well, what is that? The dollar isn't getting any stronger. That's derivatives being sold. It's not free market. That's why gold goes up and down. It's based on demand. If there was no demand for gold, let's say, gold wouldn't be 3,400, right? It can only go up because of demand. My Canadian club can only go up if people want it. It doesn't just go up because of inflation. So according to that, if the dollar has lost 99% of the value and this was $50, this should be 500. Well, that's not the case. I looked at Canadian Club at a store, and it was still $20, $30 for a 750 milliliters. That's the other little bottle, or the average bottle. This is 750. So this is, you can see 750 milliliters, right? So this is a 750. So it's the same thing. If the dollars have gone down and they raise the price, but there's got to be demand for the price, for the product. If nobody wants Canadian Club, even though the dollar's going down, the price doesn't go up. If nobody wants gold, even though the dollar's going down, does not force the gold price up. It's still an ounce of gold, but that doesn't force the price up. What forces the price up is the market demanding gold. China, Russia, BRICS, Saudi Arabia. That's what drives the gold price up, is the physical demand for the price, not the fact the dollar's going down. And yes, gold is going up in price and value. I mean, it was 2,000 and now it's 3,400. You're telling me that that's all because the dollar dropped, but yet it's the only thing that's gone up? Silver hasn't gone up like that. Why not? Oh, it's price fixed, but so is gold. Because of the demand of the BRICS countries buying the gold is what's forcing the gold up. So again, not right, Egon. He just doesn't get it. I don't know why they don't get it. It's not hard. I think they're caught in the fact that the ounce of gold is still an ounce of gold. That hasn't changed. So the only thing that changes is that the dollar goes down. So that makes the price go up. But that's not right. It's got to be demand. If there's no demand, there'd be no price. Just like the dollar, there's no demand. Nobody wants this anymore. So it's worth nothing. And you can't really measure how much they've printed. If it's gone 99%, gold should have gone up 99%, which would put it at $69 because 100% of $35 is $35. So that would be $70, not $3,500. All right. Here's another Egon one.
We're looking here at the chart of gold since 1920. That's 105 years. In
Don't
that
know why.
time, gold has gone up 160 times, which is about 15,000%. But it's a fallacy to believe that it has gone up by 15,000%.
Why?
Because it hasn't. It has actually just been standing still in purchasing power. An ounce of gold today buys a good man's suit, which it did 2,000 years ago. So gold is not going up at all.
See, that's bullshit. So you're gonna tell me it costs you $3,400 for a suit? You can probably get a suit for $300-400. Is it on sale? What's the make? I mean, that's a very stupid comment there. Gold's gone up 115,000% is true. It's based on demand. People want gold, they're buying it. That forces the price up. That's what forces it up. The fact is still 1 ounce is 1 ounce, but to tell me that the price isn't going up is just pure stupidity. It's probably the stupidest thing that these guys say is it's not gold going up, it's the dollar going down. I really don't know what they're trying to say by this. We know the dollar's going down because of inflation. You don't use gold to do it. You can just go to the grocery store and say, yeah, Oreo cookies are now $5. It's not the price of Oreos going up. It's the dollar going down. The dollar goes down, takes more dollars to buy things, isn't everything. That's what's called inflation. Hello, McFly. You wouldn't want me to hand in your homework in your handwriting. So they really are missing the point. Yes, it is gold going up. I mean, today it's, let's say it's 32.70. Well, why did it lose value? If the dollar is going down in value, gold should always go up. So why is gold going down? Oh, because it's price fixed. Oh, well, that means the price isn't real. Right. So in his world, if you want to say that gold hasn't gone down, gone up, it's the dollar going down, gold should be about 20,000, not 3,000. So he misses that point. He's just wrong. He's dead wrong. We know the dollar's losing value. We get that, but that does not correlate to the gold price going up any more than it correlates to the Oreo cookie price going up. It takes more dollars to buy it, but at what point does it do it? In a free market, the market would determine the price of gold, and that would be irrelevant if the dollar's going down. It just means you need more dollars to buy the gold. That's it. The fact it's a 1 ounce is still a 1 ounce shows you the dollar's gone down, and that was my whole theory, or my thesis. Gold was 35 an ounce, and then it was 2,000 an ounce. So it was still an ounce of gold. The dollar, it made the dollar, it takes more dollars to buy it. But the 2,000 is arbitrary. The 2,000 is what it was on comex. But if you got free market, then it would be probably 10,000. And that's my argument why I think gold's undervalued and silver is because they're being held down by comex. You're not really getting the true value of the gold. So you're saying the gold price isn't going up, and you're wrong. It is. And then to back that up and say that the dollar's going down, well, we know the dollar's going down, but that doesn't dictate how much gold goes up. As the panic of getting out of the dollar realizes, more people jump into gold, the price is going to go up. The dollar's down 99%. I say 100%. Where can gold go? It's already gone, but wait, it still goes up. So this is the problem. Egon gets that the dollar's going down, but he doesn't get that gold is going up, and it's gone up a lot.
This graph is a fallacy. It's false. All it's telling you is the price of gold in US dollars. So we should really turn the chart upside down, because that is what is happening to the dollar. It's not gold going up. Gold is just going sideways. It's the dollar, like all the currencies, just falling without stop due to the mismanagement of the economy and the currencies by the US government and by all governments. Now, that hasn't changed in the last 5,000 years. Every single currency has gone to zero throughout history. Now, at this point in 2025, I think we are at the end of another monetary era. And we see that in the escalation of debt, of deficits, in the fall of the dollar, and also total chaos in the world, politically and geopolitically. Wars, useless leaders in every country, especially in the Western countries, of course. Let's look at this chart again. We had a gold standard up to 1933, and then, of course, gold was revalued and the dollar was devalued. The gold price went from just under $21 to $35 an ounce. But then the gold standard continued in some form until 1971. This was the famous time at 15th of August, 1971, when Nixon said that we are going to not let the foreigners speculate against our currency. It's not the foreigners speculating, they're the foreigners seeing that the dollar was losing value quickly, and they didn't want dollars. The gold wanted gold. He asked for gold instead of dollars when US owed them money. So consequently, in 71, dollar was no longer backed by gold. So the $35 backing didn't exist anymore, and gold started going up from 1971. I remember it well, actually. I was working in a bank in Switzerland, and we saw how the gold price started rising rapidly from $35 to $850 in 1980. Again, remember, it's not gold going up. It's the government's just is destroying the value of your money by printing endless amounts of dollars, yen, euros, etc. Now, we had a break from 1980 to just around 2000, when actually gold corrected down and went sideways. It always does. It never moves in this.
That's bullshit. If it's the dollar going down because you're printing too much of it, why would gold go down? You didn't stop printing. You keep inflating, you keep printing the money. That money printing didn't stop. It can't stop because you need it to pay the government and the deficit and the debt and all the other shit. So it's not like the dollar strengthened and that's why gold went down. Oh, it's correcting. Bullshit. Comex is doing it. It's not the public correcting it. Why would anybody buy gold at $800 an ounce and sell it for $200? Don't tell me it always corrects. That's bullshit. If we see the mantle card at 80 grand, it's not going down to 20, it's 80 grand. People aren't going to sell it cheaper. So if you bought gold at $800 an ounce, you're not selling it for $2. So what drove the price down? Oh, Comex did, because Comex has been around since the early 70s. That's what drove the price down, paper gold. So the dollar did not get better. The dollar is still being inflated. The dollar's been inflated once the dollar is backed by nothing. So 1971, we don't back it by gold anymore. The dollar always inflates. The dollar is always worthless since 1971. It cannot all of a sudden gain value when it's not backed by anything. Sorry, Egon, you're wrong again. I don't like correcting Egon because I like Egon, but he's wrong. I gotta be honest with everybody. He's wrong. This cannot gain value. So therefore, if his argument is gold goes down, it goes up because the dollar goes down, the dollar never goes up. And therefore, gold should never go down. Gold should only go up because the dollar's still being inflated. So it's very confusing, his statement there. To say that the dollar doesn't increase in value, gold doesn't increase in value, he's out of his freaking mind. Based on what? Everything goes up in value. I don't understand what he's talking about. What do you mean gold doesn't go up in value? It's an asset. Everything goes up in value if there's demand for it, but it's got to go up because of demand, not because of money printing, making the money worthless. And so there's a contradictory here. On one hand, we are printing money, and so it makes the money lose value. So it takes more money to buy gold and silver and whatever. Agreed. However, there's the other side of the coin. If there's demand for gold, it would force the price up. Physical free market demand, as you would do at the grocery store. And that's the part he misses. So the demand for gold raises the price. The printing of the money makes the money worth less, but you don't know what the gold is. To say gold never goes up in value when there's huge demand and every central bank's buying it, he's out of his fucking mind. Sorry, Egon, you're 100% wrong here. 100%. It's the demand, especially now. All the BRICS countries buying it. Don't you think that raises the price? It's just the US dollar being printed is the only thing that's going to raise the price of gold. But if BRICS didn't want it, the price is sitting at 1600. But since BRICS came around and they got the Basel III and they stopped the banks from doing derivatives, all of a sudden the price is getting more to its natural price. And of course, if the dollar is losing value, other things will gain in value. Gold, Rolexes, Mantle cards. Why is a Montana rookie 110,000? Or is that not going up in value? Or how do you determine value then? That's how I determine value. If I have, if I have a specialty 12-year Canadian club, of course it's going. Of course it's going up in value because of demand. There's two parts to his equation. On the one side, the dollar's going down. Nobody's arguing that. That's what inflation is. You print it, it goes down. However, it's not an exact correlation to gold that is because you can't even measure the dollar going down past 99%. So therefore, the dollar goes down. Therefore, gold goes up, partly because it takes more dollars to buy it and partly because of the demand. He's just, I don't know why he's got a block on it, but he's looking stupid.
Straight line. It goes up rapidly and then it stops for a while and then it continues again. As you can see again from the chart here, so gold corrected from 1980 to 2000 and it was around 250 in 2000. That was a time.
It didn't correct. There wasn't the demand for it. The demand fell. Therefore, the price fell. The dollar was still being inflated. It's all based on demand. It's all based on free market. If people want it, the price goes up. If nobody wants it, the price goes down. So nobody wanted gold. That's why the price went down. But it wasn't because of the dollar, right? So then as people are now demanding it, the price is going up. How do you think you come up with value? I mean, the $3,000 gold is the same value as the $3,400 gold? What are you, out of your mind? Unbelievable.
And then we as a company decided that we need to protect our assets and that of our investors. So we suggested to our investors they should buy gold up to 50% of their asset at around $300. That was in 2002. And obviously keep it safely outside the banking system, protect.
So if in 2002 gold was $300 and now it's $3,200, are you telling me that the value of gold hasn't gone up? Are you out of your mind? I have in my notes in 1993, in my econ notes, the dollar had only had 11% of its value remaining. It had lost 89% of its value. So we lost another 10%. I say all the 11. And gold still wasn't that high. So what are you trying to say? That how can you say gold isn't worth more when it clearly is? It's gone from, I paid 1,700, it's now 33, 3,400. How is that not going up in value? How is it? Well, it's the dollar's going down. You're insane. It's not the dollar's going down. The dollar's losing value, we agree, because they print it too much. That's step one. But the value of the gold is clearly going up because of demand. People realize I got to get into gold, the dollar is going out, and therefore I'm going to buy it. I mean, that's clearly what's happening, which is pushing the price up, not the dollar going down, and not that gold didn't increase in value. The 1 ounce of gold, still 1 ounce, doesn't mean If 1 ounce equals 1,700, now 1 ounce equals 3,400. How the fuck is it the same value? Are you insane? Is this guy smoking?
Against the fragile banking system and financial system. And of course, we've held on to that goal since then. During the end of a monetary era that we're seeing now, because everything goes wrong. It's not just the money printing, obviously inflation. Inflation is not actually prices going up. Inflation means the value of your money going down. But governments will never admit that, of course. They said they just blame inflation.
See, I agree with that. He's listening to me. You're printing the money, so it's worth less, okay? But how is it translated into the gold price? It's gold, that's based on demand for gold. But that's what happens because they have too big a government, too big a debt. It's all over the world. They all do the same thing. And the population's getting older, so the pensions are, the more people are pulling their pensions, less people are working, so they can't put into the pension Ponzi scheme. Social Security Ponzi scheme. I don't know, as I put a lot in. It's worse than Madoff. I put a lot in, and I'm not getting anywhere near what I put in. So that's the Ponzi scheme. But this is where he's correct. That's what inflation is. This is what I always talk about.
Now we have reached a point with gold at $3,300, $3,400 when I think we're entering an exponential phase of gold going up. Why? Well, there are many reasons. First of all, since the US and therefore the EU that always follows the US, whatever they say, they don't dare to do anything different. Since the US decided to freeze or confiscate the Russian dollar assets around the world, and Europe followed, central banks decided we are no longer going to hold our assets in US dollars because it can be confiscated by the US government. So now we're seeing a gradual shift by central banks of their reserves away from dollars into gold. That's why we're seeing continuous buying of gold by central banks. If we go back to...
Which is why the price of the gold is going up. How does he not connect that dot? I mean, that's exactly what's happening. All the central banks buying gold, therefore they have to pay more because there's only a limited amount of gold. And once you run out of the gold, then you got to pay more. Just like I say in the Super Bowl. I mean, there's tickets at $1,500, 80,000 tickets. When they're all gone, nobody's going to give you $1,500. You're going to want $3,000 or $4,000 for the tickets. That's what is that inflation? Well, yeah, it's the dollar going down, not the tickets going up. No, it's the tickets going up based on demand and based on the fact that you paid $1,500. Now it's going to cost you $3,000 to go watch the Super Bowl. It's the same thing with gold. They run out. There's not a lot of gold. Once they run out, then the price goes up because demand is there, triggering the price to go up. Because you can't go to the mine and buy it. And you can't, Comex is a joke. Comex doesn't really sell physical, a little bit on delivery, but that's not where you go to buy it. Comex is it's all price fixing. That's what Comex was designed, to set the price of gold and silver. It's totally illegal and should be destroyed, and it's getting destroyed very soon. Thanks to BRICS.
The late 90s, every central bank sold their gold. They sold it at the bottom. The UK, Switzerland even, Canada has no gold, Norway has no gold left. They all sold it at the lowest point in the cycle. Now we're seeing mainly BRICS banks, Eastern and Southern. So
that's why the price went down. They all sold the gold, which lowered the price. Now everybody, so why doesn't he connect the dots to that? Why did the gold go down? Because they all sold it. Demand went away. They sold it. That lowers the price. Now everybody's buying. That raises the price. But why does that not connect the dots for him? It is the gold going up and down is the value of supply and demand. The demand is huge, so gold will keep going up because there's no other option. Poor Egon. Jesus.
Central banks buying gold, not the Western banks, but they see what's coming. So we are going to see a major shift by central banks and therefore also by investors, institutional investors, family offices, from paper assets into real assets. And gold is going to be obviously the number one asset from the purpose of wealth preservation. Remember, gold, as I said before, is the only money that has ever lasted in history. Every other currency has gone to zero. As Voltaire said in 1728, I think it was, paper money eventually returns to its intrinsic value, zero. So the dollar is down, and all of the Western currencies and most other currencies too, 99% since 1971, measured in gold terms. So we only have 1% to go for the currency to go to zero. But of course, 1% from today means it's going to go down 100% from today, because if it's going to go to zero from now, it needs to go down another 100%. And that's, in my view, what we're going to see. We're seeing bigger deficits than ever in the world. Debt's going up faster than ever. US being more mismanagement than it's ever been. And that's the typical signs of the end of an era. So these are facts. But what are the consequences? The consequences are that you are going to see the biggest destruction of wealth in history, because we have now paper assets that are all in the bubble: stocks, bonds, property, etc. And that means that in relation to gold, all of these assets will go down 72 to 99%. The bond market will go to zero, in my view. If they go to zero, interest rates will go to infinity, and we will have very high inflation. But at least interest rates will go back into their teens, like I remember they were in the 1970s and early 80s. And we'll have a major fall of especially the Western economies around the world. Of course, the East and the BRICS countries will suffer also, but not to the same extent, because they're more commodity based. So for people now who want to preserve their assets, remember there is only 0.5% of world financial assets in gold today. 0.5%. Central banks hold about 36,000 tons of gold. You know that 36,000 tons is about $3.8 trillion. The value of Microsoft, one US corporation, okay, the biggest one, is $3.8 trillion. So we're looking here at one company in the US worth as much, is valued at $3.8 trillion, which is the same as all the gold held by all the central banks in the world, which are supposed to back the currency of these countries. You could see a massive mismatch between real assets, gold, and bubble asset stocks. So in my view, what was going to happen to the gold market is that because of the major investment that are going to gold at the same time out of paper assets, gold is going to be revalued by multiples. But it's not the value of the gold measured in paper money you should look at. It's actually that how much gold you hold. An ounce, a kilo, a ton, whatever, depending on your level of investment. At whatever level you hold it, that is going to preserve your wealth and save you from the destruction of the paper assets that we're going to see. Remember, gold is nature's money and the only currency that has survived throughout history without fail.
Are persistent dental issues?
Okay, we get it. He's repeated it. So that's the point. It's because they're printing the money and the inflation, you go into real assets: gold, silver, Rolex, nano cards, biggety cards. That's what you're doing. And that's why you're doing it, is because the dollar is being destroyed, losing its value. So he's trying to explain it costs $35 to buy an ounce of gold. Now it costs $3,500 to buy an ounce of gold. And it's not gold moving, it's the dollar being worth less and less and less, which is fine, but you can't say gold hasn't gone up in value. It has. The fact that it takes $3,500, soon it's going to take $4,500 to buy an ounce of gold. But why isn't silver moving? Because it's price fixed by JP Morgan and the comex. That's why it hasn't moved. And we know that. And with July 1st, with Basel III, you'll see it. As far as I know, it's going to hit July 3rd or July 1st. I haven't heard any change in that. They'll probably all cry about it, because then they're going to have to buy silver and cover all the shorts that they haven't covered. But that's where they're at with it. So keep that in mind. But it doesn't really matter. The dollar is going out, and BRICS is buying gold and will be buying silver. Russia's buying it. China's buying it. So that's going to raise the price on silver for the same reason gold's gone up. The demand, people buying it, demand will force it up. And it's not volatile. The volatile is the derivative option play on COMEX, not the physical play. So we have two pricing mechanisms. You have the comex paper pricing, and we have the real world physical pricing. We look at and focus on the physical. That's why we say $5,000, $10,000 an ounce gold, because this is going to go to zero, and you're going to need to eat. So you have to be in money. Now, if you have a Rolex or a Mantle card, you should be able to sell it for gold. But but this is worthless and this is worthless. At the end of the day, these are both worthless. They have been printed and there's no value in it. And you have to understand that concept. And Bitcoin's not the answer. Bitcoin is not even real. And to say it's money is bullshit, because to be money, it has to be wanted, and nobody wants it. You can't go to the grocery store and use Bitcoin. Now, well, you can't go and use gold either. Well, yeah, but gold has a value, right? And Bitcoin has a value in dollars. Gold does not need dollars to have the value, right? Sort of like your car. You got a Mercedes. Well, it's got a value because it's a car. It's not going to be the same in dollars as it is in gold, but you'll use it for that. And that's what you're going to use, is the gold to buy things. And people will give you that. Gold will be the money. In Rome, the Appian Way was gold and silver. There was no dollars. There wasn't the Roman lira. You had gold or you had silver coins, and that's what you bought. Milk and bread and whatever else you bought there. The wine. Anyway, so let's take a look at Mark Mcgwire.
Stop paying taxes on your real estate. I'm sure you already knew this, but if you did not, know that.
Okay.
Tiny.
All right. So Mark, I had a hard time following him on this question, but we'll do our best to explain it. The guy's basic question. Well, let's listen to the question.
Own world-renowned whistleblower and precious metals industry expert, Mr. Andrew Mcgwire. And this week, we'll be answering live from the vault community questions. So let's head over to the UK now and let's join Andrew Mcgwire. All right, this week, we're going right to the live from the vault community question of the week. And this question is from Doug. Go ahead, Doug.
I have heard over the years that gold moves down when the markets are crashing because everyone is selling their gold to cover margin calls. However, I've also been taught that most people do not own gold. So how it could be possible that everyone's selling their gold when they don't have the gold to sell? I always felt like it was the government that was suppressing the price of gold during market crashes to give the impression that gold is no better off than stocks, and it too will crash. Just wanted to get your opinion about the strange relationship between market crashes and gold falling the markets down.
Hey, thanks, Shane.
Okay, I'm going to answer this in English before Mark answers it in Chinese. Again, what is going down is the paper gold. And you got JP Morgan, Citibank, Goldman Sachs, are the bullion banks, are losing money because people are pulling their money out and the money is worthless. So the banks sell the gold because they need money. People sell their assets when they need money. Now, some people have gold, but you won't see it because we don't have 10 tons of gold. That's going to affect the price, because the price is not affected by what me and you go to the store and buy 2 or 3 ounces here. So that's the problem. So it's, again, the paper gold going down, and it doesn't necessarily mean it. And they can sell that gold doesn't have a value, but anybody who knows it does. That's what comex, that's what BRICS is coming into. They're raising the price on gold, and as the dollar goes out, the gold's going to go to the moon. The physical gold will go 10 times higher than the paper gold. So the other thing is they don't know we have it. I don't put a sign on my door, I got gold, right? And it's not, see, if you have money in the bank, everybody knows you have money in the bank because they can see the statement and they can see, oh, this is what you have. You got 50,000 and it's getting interest income. We don't show that because we don't have it. We have money in gold. There's no form from no bank because we're not attached to a bank that we have it. So when the economy goes, people with gold will sell it if they need to pay off margin calls or things like that. But there's nothing he said that makes any sense. There's no correlation. When 2008 did gold go down, I thought it went up. I know I did my Attack on Wall Street speech, and if the guy would have bought $60,000 worth of gold in 2005 or 6, and then he sold it in 2009 or 10, he would have made $110,000. So I don't know what he's talking about. The gold price is controlled by JP Morgan and Comex and the LBMA, which is the London base metals, whatever. That's who prices the gold. It's not free market. So everything he says doesn't mean anything. What it means is the real price of gold, and that's what we own physical for. You do not get into ETFs or gold stocks. You can play gold stocks, and they're going to get crushed with the market just like everything else until you get until the bottoms out. So the stock market's at 42,000, 43,000 now. Well, when it goes down to about 5,000, that's when you buy your gold stocks because they will go up. But there's 17 trillion in foreign investment in the stock market. Russia's, Chinese, Germans, French, Italy, the British, they're in our stock market. Once they realize the dollar is worthless, and most of them are, they start pulling out the 17 trillion and the market crashes. And they don't care. They're not going to say, geez, you know what? Yeah, I have that Newmont Mining gold stock. Don't sell that. They're going to sell everything because they want to get out of US dollars. And that's really the whole point, is the US dollar being hurt, not having a value, so people get out of it. And that's why you go to gold, because gold can't be printed, so it can't lose its value, but it can go up a lot higher than Egon. So when the dollar goes out, you don't think gold's going to still keep going up, and silver? So let's say this is 99% gone, and I think it's 100. So if it's 100% gone and gold's 3,400, you don't think gold's going up over 3,400? You're out of your mind. All the people who are in the dollar are going to flee and buy gold. And that's what's happening with the central banks. They don't want their reserves in dollars. How do they get so much reserves? Either buying the treasuries or buying our goods and trade. China, who trades us, and we get all these nice shirts and glasses and computers and phones, we buy. That's why there's no trade imbalance. We give them money. They bought treasuries with the money. They now realize the money is worthless, so they want to get out of the treasuries and into gold, and that's what they're doing. And as they do it, and Japan does it, Russia's already done it, then people start understanding that the dollar's worthless. Nobody wants it. They did a treasury auction. Nobody wants it. So it's immaterial that the price of gold goes down because it's not free market. The stock market's a little bit more free market. It's still kind of a Ponzi scheme. But gold is if it's going down, it's because COMEX is pushing it down, sort of like today, where it's down $50, $60. It's all bullshit. It's the end of the month. You watch Monday, it'll be right back to 3,500, 3,400. All right. Now, this answer is really bad. I don't know it's a very confusing answer, but I'll try to go gentle with you. I'll never go gentle into that good night, Rodney Dangerfield.
Always good to see your smiling face, my friend. As you just said, if I were you were any better, you'd be twins. I love it. Anyway,
Wins.
Look, it's so good to be with everybody. This is about education. It's really about taking questions the best questions, or the most appropriate questions. They're all good questions, but the most appropriate question.
If this is about education, it's got to be the worst teacher I've ever heard. Alyssa says I'm a great teacher because she can understand it, and she's not educated. This is a bad teacher because I can't. I got a master's, and I'm like, what the fuck is he talking about?
For what's happening right now, and actually, this question from Doug is great because it covers really a full spectrum of questions, and then we're trying to make this interesting for everybody. And obviously, we have everyone from institutional traders all the way through to brand new stackers.
Answer the question.
Investors looking to understand really what is driving the often mystifying gold price setting process, and who the current main actors are. So even an institutional who would know all that wants to know who's behind it, etc., etc. So
JP Morgan.
We'll drill down so to provide a little context for those that don't know a lot of this stuff. Look, to provide better context for this wider range of subscribers, I'm going to answer Doug's question by walking through the most recent example of the current gold sell-off, which we've just seen, and who was behind it, and what was the objective. Now,
get to the point already. This show was done on Wednesday, the 25th. The answer is Citibank, if you'd ever get to the fucking point.
Doug's question mirrored a lot of questions. And while this kind of deliberately created air pocket comes as no surprise to many subscribers, long-time subscribers, there were many other people rightly puzzling as to why gold suddenly reversed $150 per ounce from last week's tag of $34.50. Now, it's a good time to kind of quickly hop in on the charts to best illustrate just how counterintuitive the selling actually was, especially as we have very strong physical demand drivers powered by a race by central banks and sovereigns to sell dollars for gold into a series of higher stair steps. I'm going to show some links for that in a little while. But here, let's have a look at the charts. So this leads us to identify who really led the sudden gold sell-off, why they were behind it. And despite their best efforts, all it's done is to discover the next of a series of fresh, physically supported higher stair steps
4,500,
leading to $4,000 gold and $4,500 gold, but $4,000 being the immediate target. Now, I'm recording this at the pit open on Wednesday, and the Wednesday the 25th, which is also options expiry, and really a good time to sort of check through the footprints.
See, the option expiry was on Wednesday, and now we have the month-end expiry today, and that's always drives the price down, is the fucking derivatives and options of the JP Morgans and the Citibanks and that they mark to market, whatever that means. I'm not sure. That's why you always see at the end of the month the price go down. That is not free market. That's bullshit. That's just them getting the price down so their books look better. Don't really understand it. Not a banker, but that's what they're doing. So it's always going to go down the end of the month. That's why it's down a little today. We understand that. Not because of the free market. Nobody is selling gold. No, everybody's buying it. All the central banks are buying it. So I think what happens is the central banks wait for these days, knowing the price is going to go down, and then they buy it. Like Monday, it'll go up $100. So they realize what they're doing and saying, good, I want to buy, but you know what? If I wait till Monday, I can buy it at $50 cheaper, and I'm going to buy a ton because I'm Russia or whatever, and that's what happens. So that's really what the whole story is.
Leading into it. Just to say though, this is a futures chart, which is trading in sync with spot, except that the futures chart, because it's a further out contract, is actually trading at around about a $13 to $14 premium to spot at this point. And that simply reflects the carry costs into this longer dated contract. So let's start off by looking at the spot 3450 level, which is currently 3464 futures. So that was here, it was higher. So this was pretty much the top of the range. So following very strong SGE, Chinese safe haven physical gold demand at spot 3450, which had picked up into Friday the 13th, which is pretty much here, just before we opened up on the Monday after. So this was very strong demand and noted on Friday the 13th. And that was obviously to do with heightened war risks and one thing and another. And that followed through with more buying at the SGE Open, Chinese Open on Monday the 15th, for spiking another $20 higher. And then we got a sudden, really essentially the start of $150 waterfall into the 3,300 level. Now again, there's about a $12, as you move down, about a $12 premium to futures. So this line represented 3,300 spot. So this picked up steam rapidly, and really at a time when gold really should be doing what it was saying on the box, namely acting as the safe haven. And the selling was extremely counterintuitive. And really this was what drew the attention of the first-tier liquidity providers, whose really job it is to ensure Basel III NSFR compliance at the global-facing FX gold fixes, and were having to supply gold into those fixes, into this series of lower prices. And for reference, this is obviously before the PM fix.
I have no idea what he just said. It's not in English. If he's teaching, nobody's learning a thing. I can't even see the lines moving. So this is a very bad explanation. Basically, the bullion banks control COMEX, shorting it, driving the price down. That's all you need to know. It's not free market where I'm selling and you're buying from me and we set a price. Like everything else in the world should be. This is not. This is bankers doing derivatives, going, I'm going to do Eddie Murphy. I'm going to short it. And then price goes down, not by demand. So I don't know why he's running around in circles. Just answer the fucking question.
So I've just marked in where the AM fix was this morning. So the reason I'm showing this is really because we want to step through the footprints as it provides a timely example of how, as Doug puts it, he said, given most people do not own gold, how can it be possible that everyone is selling their gold? And that, we need to answer that question. And this also leads into his questioning about government suppressing the price of gold. So this is a really good question. We're going to drill down into his whole question. Now, the first thing we need to do is differentiate the difference between the tiny percentage of Western-facing funds and people who own or stack real physical gold. There's a big difference. And the physical buyers never sell their gold versus the paper gold traders who place really just high leverage futures bets targeting a higher or a lower cash settled gold price expectation. Now, we call them obviously the speculators. Now, these paper or synthetic gold traders, what they're doing is borrowing gold from what is essentially a cartel-rigged casino environment with the house pitched against them. Now, we call it the comex casino, where you can borrow exposure to paper gold with only really 4% of skin in the game, which makes it very attractive for speculators. Now, that means a speculator can currently control 100 ounces contract of gold worth $340,000 for a tiny $15,000. Now, the trouble is, leverage works both ways. And in this case, these speculators have been buying gold for the similar reasons as physical buyers do, except for one very big difference. Paper gold can be created out of thin air, while physical gold is limited in supply, and it's extremely sensitive to supply-demand fundamentals because physical gold is globally fungible. This is the important part. It's globally fungible. No matter where you go in the world.
Okay, now he doesn't explain fungible. Fungible means it's the same. In other words, an ounce of gold in Canada and an ounce of gold in England and an ounce of gold in Krugerrands and an ounce of gold in Austria and an ounce of gold in the U.S. are all the same. It's always an ounce of gold, it's an ounce of gold. That's why I tell you buy whatever's cheaper because you're buying the ounce. And if you notice, the ounce of gold is priced as an ounce of gold. It's not, oh, a Canadian gold's this and the U.S. gold's that and the Philharmonics are these and the Krugerrands are that. It's an ounce of gold is that. That's what he means by fungible. It's the same. I have to teach this guy how to teach.
Gold is recognized as money, and it's the same value around the world, whatever that value of that gold is each day. So that each physical ounce, kilo, ton, that is purchased in the physical markets tightens a single source of available supply and incentivizes the next seller to raise the price to get the best price, as you would.
Now that contradicts Egon. Egon's saying that the gold never goes up in value. Gold just sits there and it's the dollar going down and it's so many dollars to buy the gold and gold just never goes up. And what does Mark Mcgwire just say? The one guy sells it for more, as you would, because he bought it and he's going to make profit on it because it's limited. So they're contradicting each other. We agree with Mark that obviously gold's going up in value. I mean, it goes from 3,000 to 3,400. Obviously, it went up in value. You can't measure the dollars going down. It's just such a stupid comment by Egon. I can't believe he made such a stupid argument. All right.
In a normal market environment. Now, quite the opposite. If a speculator buys or sells freshly generated paper gold futures contracts, which are not physically settled, and the resulting supply and demand price that comes out of that is purely synthetic. Now, while this comex tail wagging the 10 times larger physical dog does influence the 2 daily global gold fixes, it's only to the degree where the comex pit managers can actually lay off the liability into a shrinking number of siloed comex speculators. And as we can see, the scope of being able to do so is fast shrinking as the real global-facing physical dog begins to actually wag the speculators' raters right off the comex tail.
So what he's saying is they're using the physical from China, Shanghai, to come up with the price. What we've been doing is letting comex determine the price, and then they sell the physical. And what he's saying is now Shanghai and Russia are pricing the gold in physical, forcing comex to then react to that. So that's what he's saying.
Now, while physical buyers are competing to exchange fiat for gold, or actually maybe just to help hedge their wealth against rapidly debasing debt-backed dollars or pounds or yens, whatever
Inflating,
it is,
not debasing.
this is done into a limited global supply. Given the exponential pace of fiat money debasement, you just have to look. Go down to the grocery market. You just have to look any chart, and you will see just how many more dollars it takes to buy anything. So what the physical guys do is look at these fiat money debasements and value gold as a consequence. Value gold literally hundreds to thousands of dollars higher than is currently being offered for sale because it's being offered.
All right, debasement is inflation. For some reason, they think you can debase the currency. You can't. You can only inflate it, which is printing it. Debasing is coins. The Romans took the gold and silver out of their coins. That's debasement. You do not debase paper. You inflate paper. You print more, it's worth less. They couldn't print more gold and silver. So that, hence the term, whenever you hear debasement, actually means inflation. It means they're inflating the money supply, which again makes it worth less.
The same, in a diluted form. And it's not that gold is actually going up. It's simply that the same ounce of gold, the ounce of gold benchmarks really the loss of purchasing power of no matter what currency you're in, the full range of rapidly debasing fiat currencies. Now, each day, each month, quarter, year, decade that goes by, it simply requires more freshly printed dollars to buy the same ounce of gold. That's really
okay. So he's contradicting himself. Didn't he just say the price of gold's going up? And now he's saying, well, it's not gold going up, it's the dollar going down. And again, he hears it, but he doesn't understand it. It's wrong. The gold goes up in value because of the demand, and therefore it's worth more. And it's, it's not just the dollar is going down, but it's unrelated to the gold going up. So if the dollar goes down, $100 today, gold doesn't go up $100 today because gold's controlled by comex, and the dollar's controlled by the idiots at the Fed printing and printing and printing it.
What's happening to gold? In contrast, highly leveraged casino gold speculators, and they're literally corralled inside the COMEX casino, and they have the US traders have no ability to trade the spot delivery physical markets. So, in consequence, they have no visibility into the real wholesale market supply-demand fundamentals, whereas the house does. So, with this knowledge, the house knows exactly how many chips to lend to create enough liquidity to set a non-deliverable casino ticker price for gold. You know, when you're in a casino, you see a ticker price going on. It could be racing, it could be anything. I mean, that's their number, that's their presentation. And this is how the cartel generates regular wash and rinse cycles. That's something we're seeing now, which is why this question is pertinent. Now, given the casino pit managers hold the book on the chips borrowed from them on margin, and the house runs this ticker the specs actually knee-jerk react to, in aggregate, the house market makers know exactly where the speculators will be forced to sell their positions. And just like any other casino setup, the house wins 95% of the time. And as the LBMA CME market makers act as a cartel, it's really sanctioned wire fraud by any other name. Now, while there are legitimate reasons for trading futures contracts, that could be to trade physical positions, producer or refiner hedging, these bets are not speculative and tend to be sticky in nature, and they're not to any degree asymmetrically imbalanced. It is a legitimate hedge, meaning that these positions, which is part of the open interest, which is why you have to look at the breakdown of it, they're not leveraged and they can't be rinsed out, but they can be called on for one-to-one physical delivery at any time, which is something we see sometimes at the back door of the COMEX. However, what we're focusing on, we're actually going to focus. We're really focusing on the leveraged speculators who are simply seeking to profit from price movements for cash settlement. Usually, they're on the long side. So it's this simple. Once speculators have borrowed enough chips and the price jumped on for the right evidence is the house is on the losing side of that trade, they move in. But this is the key, in unison, because they're market makers and they have a footprint in the FX spot markets, which COMEX traders can have no visibility into or are unable to trade, and they have a footprint in the COMEX. So, in unison, they can ring the register of these borrowed positions, or as Doug rightly puts it, the exact point where speculators can be margin called by the pit managers to replay these borrowings. So that's the how. And now, using the current sell-off footprints, who and why was gold called down by? Now, given all the gold supply that hit the market emanated out of the 96% leveraged COMEX futures markets, but into this very strong but unleveraged physical, this selling was into unleveraged physical buying. Our liquidity providers dug down into the footprints to determine who was behind this latest round of extremely counterintuitive driven gold selling that commenced on Friday the 13th in gold. We looked at that on the chart. Now, each footprint on that Friday indicated it was likely Citi's trading desk breaking rank.
That's Citibank.
All the other bullion banks actively bullish gold calls. In other words, gold prices. Let's call this section perhaps Citi versus Goldman. Two Goliaths here, or Citi versus every other bullion bank. Now, by Tuesday, the 17th, we had word that Citi had created a futures market sell ignition. And what it was they'd done it was they were tricking in the captive producers that they finance to hedge production, selling it forward all the way into 2026. So, to me, why would you be to that aggressive degree? This was extremely counterintuitive. So in the face, especially when you look at the numbers they were calling, so in the face of really very strong central bank gold buying, Citi openly broke rank from every single other bullion bank, calling for a rotation out of gold futures and the GLD ETFs, the gold ETFs, to literally dump those to buy risk assets. Hence the waterfall selling in gold and the rally in stocks. Now, to suck in momentum selling directly after the London Open on Wednesday, Citi finally came out on the wires, openly, publicly talking gold down, going as far as to call gold down as low as $2,500. Now, while that outrageously counterintuitive price target was deliberately designed to attract the puzzled mainstream media attention, I saw Bloomberg on there asking questions about it. Reading between the lines, they were actually really hinting at a bearish consolidation at $3,000, probably where they really were trying to buy it back and nail these producers and literally rob them as they were targeting lower, and literally buy back what these guys were selling. However, Goldman Sachs immediately and publicly, deliberately countered Citi's bearish call, reaffirming their long-standing gold targets of 3,700 and 4,000 for the first quarter, by 4,000 by the first quarter of 2026. So here's Goldman's assessment that directly followed Citi. Since then, many other banks have come out to counter this obvious attempt to suck in momentum sellers. Now, UBS was on Bloomberg this morning, this is Wednesday, based on tight supply and very strong central bank buying, reaffirming 3,700 to 4,000 gold as fair value. So really...
So do you see how the demand is affecting the price? So I don't know what Egon's talking about. No, it's the dollar being inflated, so the gold price doesn't move. And yet all they're saying is the gold price 3,500, 4,000, 4,500. And Citi's trying to say, oh, it'll be 3,000. And just to get it go, they want it to go down because they want to buy it, because they've missed the boat, because everybody else has bought, wants it to go up. Me and you have bought, we want the price to go up. So that's really why I disagree with Egon. It's clearly demand making the price go up, makes the value of the gold go up. Not the dollar going down. The dollar's going down is another, yes, it is, but it's over here. Gold's over here and the dollar's over here. In fact, the dollar's going down and it needs more dollars to buy the gold, but the gold price is being set by the bullion banks. All right, let's...
This is on every other bank is long. So the question is, why is this deliberately driven price divergence happening? It's this simple. Citi and JP Morgan are the primary agent stick handers handlers for the deeply offside officially held OCC FX bets. If you remember, we talked about the Office of the Comptroller bets. We're going to show them in a second. And these are the bets that have been accrued over time against unallocated gold. Now, we'll stress unallocated gold. This is FX bets that should be NSFR compliant, are not NSFR compliant, are not Basel III compliant. And so what they're doing is but when they get demanded for delivery, they have to be delivered at the fixes. So these bets, really, they're attempting to mark these positions to market later today, which is Wednesday the 25th, into gold futures options expiry, followed by even larger Office of the Comptroller FX bets on Monday the 30th. So here are the actors. And as we looked at in our last couple of episodes, the CME-LBMA Cartel Alliance leverages the distance between the very recently extended non-Basel III compliant allowable 20% unallocated gold haircut that they're allowed to have when they trade amongst themselves. And really, it's pitched against, though, fully compliant Basel III gold. Now, the lack of Basel III first-tier high-quality liquid asset FX gold compliance in the OCC bets is exposed in the OCC small print. Have a look at this. And it says, under the CCR gold derivatives, they're considered precious metals derivative contracts rather than an exchange rate derivative contract. And what they're saying is it results in an increase in reported precious metals derivative contracts compared with prior quarters. No sugar share look. Also, this deliberately dragged out first quarter of March 2025 OCC report still reflects data from the fourth quarter of 2024. There is absolutely no good reason for this hugely tardy reporting delay to extend all the way to the second quarter of 2020.
All right, let's move on.
Why is that? Because price discovery is increasingly being set by Eastern physical exchanges where the supply and demand of real physical bars are setting the global price. And as we've been tracking, China stepped in to launch the Shanghai Futures Exchange on the 1st of March 2024, overnight injecting sufficient physical market liquidity to wrest control of the global supply-demand price-setting process. As a result, the Western LBMA and CME cartel controlling the cash-settled unallocated gold market immediately.
We're looking here at the chart of gold since 1920. That's 105.
Net of the tiny volume of unallocated gold market immediately began to be drained of sufficient paper market liquidity to be able to equitably cash settle a tidal wave of 20% unallocated FX gold haircut in-house. It was being called for delivery. This simply forced the cartel to raise the price of unallocated gold being alchemized for physical delivery at the Basel III compliant Loco London FX fixes. So under this smoke and mirrors action, a growing number of Western-facing exchanges are now geared up to physically settled foreign exchange gold transactions. And these exchanges are increasingly taking control of the global Basel III FX prices, which is why gold is evidencing a series of higher stair-step prices, which are backwashing into Loco London Basel III compliant global fixes. And here's where the last one was. An increasing number of Western-facing physical exchanges are geared to really easily alchemize mispriced, leveraged, unallocated paper gold presented at the deliverable local London fixes. The problem paper shorts are running into is net of the tiny volume of remaining COMEX open interest. Foreign exchange gold, by weight, is globally fungible money and is self-arbitraging at real physical prices across the globe. Now, the latest attempts to gaslight siloed blinkered leverage CME LBMA unallocated gold traders into targeting these synthetic moving averages has zero merit, incentivizing every fiscal-facing central bank, sovereign and bullion bank, including Citi, and all the other bullion banks, to buy the dip. Now, if momentums do add naked gold shorts to fund Citi's risk market rotation trade, it will serve to suck in rehypothecated leased gold into a growing number of Western-facing physical exchanges. The latest one, again, being reported here, this time by Bloomberg. We're also now seeing global prices being determined in silver, which, while silver is not Basel III NSFR compliant, the global FX price being set loco London is deliverable outside the LBMA ecosystem, exposing the cartel to the short side of very strong global-facing FX silver demand, which they cannot supply unallocated silver into at current prices. And because they're not doing it, it's coming from producers, it's coming directly to these exchanges and starving the LBMA of product. So they're increasingly being forced to convert leveraged unallocated positions for delivery while they still can. Now, speaking of silver, just look at how these official OCC bets were driven down to the exact 35.20 OPEX sweet spot. This was done yesterday ahead of options expiry today. Now, this to me is wire fraud by any other name, because you've got an aggregation of banks working together. Now, the silver futures were flash sold through targeted long stops. You saw that here after the fix, of course, through targeted long stops, right back into this 35.20 bull pivot confluence with this 35.20 OPEX sweet spot. So, an exact hit. And it evidenced very, very large commercial short covering. Notably, the spot low of the day was actually 10 cents higher. And where are we seeing the capping now into options? Exactly where the COT cutoff was. And that's the same in gold, which is also experiencing capping. And just to provide a little context, if we look at the 4-hour charts, and we talked about this resistance line that has finally been broken through, has now become support. So really, anything above here is really going to have an effect of driving the price substantially higher into a minimum of $38. And I mean short-term $38. In the bigger picture, gold is at least targeting the 40 level on its way, where there will be sufficient stops to drive it up into its all-time highs. And we're just moving into season. So bottom line, when Citi is so obviously attempting to trick in fresh leverage short selling to finance this leverage rotation into risk markets, every single bullion bank, including Citi, are taking the long side of these sellers, as is evident in this Financial Times report. Central banks plan to boost gold reserves and trim dollar holdings. Here we are. And to illustrate, there's very limited physical on offer into central bank global demand, which has been responsible for soaking up all the physical supplies ever put on offer at any price, that is. Doesn't matter if it's high or low. An increasing number of global central banks are seeking to actually now repatriate gold they already own back to their own vaults. Again, Financial Times. Central bank buying and gold repatriation stepped up significantly after physical gold was reclassified as a first-tier NSFR compliant high-quality liquid asset. As also reported here, foreign central banks continue to want their gold back.
All right, thank you, Andrew, for that amazing question. I think the entire community is going to agree with me when I say that you've just put a bright, shiny light right down the casino cartel rabbit hole. And now, just to cover off on the other questions from the community about what do you expect in the short term here, and what's your take on things that are happening right now?
Sure thing, Shane. Obviously, central bank demand alone is going to underpin a series of higher stair steps. But very short term, while no one will chase anything until all the options or these OCC bets are squared today and the OCC bets on Monday, this is what we're seeing. And obviously, nobody's chasing anything. It's being capped heavily. These are big derivative bets that could take down the too big to fail bullion banks we're talking about. One component of a 2 quadrillion derivative market, and gold is a very big aspect, and silver is a very big aspect of that. Now, the gold futures OPEX structure for today, the sweet spot is 33.50. Go figure, look at the chart. With every strong resistance, with really, really strong resistance at 3,400. So it's not going there before expiry. Hence the price capping. And as is always the case in synthetic comex-centric options price suppression events, no one will be chasing anything above the options sweet spot. But liquidity providers report these capping shorts are once again stealthily being alchemized, very quietly, coiling gold for a physically driven catch-up rally. Now, liquidity providers are reaffirming the strong Asian safe haven demand is definitely at odds with the usual official gold capping events, which historically, they always follow a geopolitically driven reason to buy gold. You know, every time there's a geopolitical event, gold spikes higher, immediately gets taken back down again. Why? Because it's immediate FX market intervention. They don't want people racing into gold, literally. But once that initial gaming plays out, then gold tends to rise. But by design, the rise won't be attributed to the undiluted race into safe haven physical gold. Of course not. They don't want you to see it. Spot silver demand is also evident into Eastern markets. But as we identified earlier, silver futures were flash sold through targeted long stops to exactly hit its 35.20 options sweet spot, where immediately it evidenced obvious and very large house short covering. Notably, the spot low of the day, was 10 cents higher than the futures price, which should not be happening. And what it illustrates is mispriced market. And while Citi and all of these and those hangers on haven't publicly tried to talk silver down into the current 35.20 sweet spot, they're also reported to be behind the capping in silver futures. Spot silver is trading at a consistent premium to silver futures. That shouldn't be happening. Currently today it's 6 cents, but it's been as high as 12 cents or $600 per contract. Now, given though through the last 4 sessions, silver open interest has evidenced 9,682 or 1,500 tons rinsed out, even averaging the spot premium to futures at, say, 6 cents. That's close to $3 million of house positions that have been rinsed out by the pit managers. That's the game. This is telegraphing. Foreign exchange silver is being locked in, though, because the foreign exchange price is higher than the futures price. Because it's being locked in at the FX fixes to future at premiums. And it also indicates the imminently expiring July COMEX silver contract, which goes into delivery at the end of June, will be stood for delivery and will be drained of cheap, immediately accessible silver and the current open interest that remains. So the potential delivery exposure right now is a very large 6,000 tons. And while a lot of these positions will, of course, they'll be rolled into the upcoming September contract, there are only 2 sessions left to actually deliver the last 1.4 tons of June deliveries. Why the heck anyone would hang on to the last day to deliver a June delivery that should have actually been delivered at the end of May? So to sum up, basically, both of these bid pooled efforts in gold and silver are options, OCC related, ahead of options expiry today and OCC related capping. And it's being led by Citi, stick handling official OCC bets. And while we expected a last kick at the can ahead of US Basel III compliance, all it has achieved
July 1st.
is to secure the next higher, globally determined, higher price stair step with almost no paper speculators on board to rinse. Just to finish up, though, we have contacts on the ground and we'll be closely monitoring the upcoming 17th BRICS Summit in Rio on the 6th and the 7th of July. And we're going to provide a full update in our last episode that will be recorded on the 9th of July. So BRICS, remember, is a platform for accelerating financial multipolarity with a view to expanding the new development bank so as to bolster national currencies in intra-BRICS trade benchmarked to gold. That's the key thing. And with gold markets now being discovered in Ava, and prices now being discovered in Asia, as Bloomberg draws attention to, it provides the BRICS autonomy. Gold is already being price discovered in the Eastern physically backed markets. The formalizing of the financial infrastructure to support liquid global settlement is the final piece of the puzzle, and it will be the death knell of the COMEX if it does not become Basel III compliant. We talked about it before. Yeah, you can avoid being Basel III compliant. You can keep playing your paper game, but you've got less and less people to actually cover your exposure into. So you're in trouble. And simply what happens is you're going to influence the fixed price through your COMEX gaming, and that's going to be delivered. And then they're going to turn around on you. And what they're doing in silver right now is loading up at the back door and taking it and literally draining those vaults. So unless it becomes Basel III compliant, goodbye. Now, gold is strengthening the BRICS currencies at the expense of the dollar. In case you haven't seen the ECB financial stability review,
That's European Central Bank.
Unallocated paper gold to physical imbalance, identifying large foreign counterparty derivative exposures that must be brought back into essentially rising prices. So the only question left to ask our dear subscribers is, how prepared are you to protect your wealth?
So COMEX is gone, right? They're playing these little games and Citibank and all that. It's gone. There's nothing they can do to keep it. So buy your gold and silver now. Like I said, July 1st. So you got a couple days this weekend maybe, and it's going to explode. So forget what you see today. They're just fucking around with it. Let's look at, or let's end with what's gold and silver doing now. Silver's still 36.15 and gold's 32.73. So, you know, they drag it down just before 10 o'clock. And of course, then the US buys. So down to 32.55, but then it's 32.73. And I wouldn't worry about it. We're not that far. Boom, a couple good days and we're back at 3,400. The demand is there, which is what makes time travel possible. That's what makes the price. So that's really what we're at, and looking strong there. So again, as Mark said, that Egon, what Egon's trying to say is the dollar's gone. Buy gold. He just doesn't get the value of the gold goes up. And what Mark Mcgwire is saying is all these bricks are buying the gold up, and comex is basically gone, and that's what's driving the price. Goes down a little bit, but it's going to come up once comex is gone, and comex can't do anything but go out. So comex is gone, and that's it. So I think that's it. 2 hours. I don't really have anything else. No comments. All right. So that's where we're at. So buy your gold and silver this weekend, 32.72 right now. 30. It'll probably end about 32.80, 32.90. Again, it closes at 5 o'clock today. And let's look at the Dow, which is totally clueless. Again, they're trying to make it look like everything's okay because they're fucking around with you. The Dow is up $370 to 43.7. This is absolutely a bullshit number. This is why you don't play stocks, because this is not a real number. So keep that in mind. Just ignore it. Don't say, oh, you got me out of stocks. I've been out of stocks for about 4 years now. I don't miss anything. I'm making more in gold. As I showed you, the market from the beginning year is up 9%, and gold's up 40% in a year. So I'm not losing any money. I'm not losing any sleep, and I'm not worried about it crashing. I'm not worried about the dollar crashing because I'm not in it. So that's the whole key is, if you're in the dollar, you're fucked. So you got to get out of the banks. You got to get out of the stocks, get out of Bitcoin, get out of real estate. Because it's all going to crash because the dollar's crashing because they're printing too much dollars and makes it worthless. So you get into the lifeboat, which is gold and silver, and you're fine. Bitcoin isn't real. I'm sorry. I'm gonna finish watching this Bitcoin thing. It's about an hour long, and I'm about 20 minutes into it. I'm just curious to see how stupid these people really are with that. Baseball tonight, I had 4 games. I have the New York Mets, 2 units. The Yankees under 8.5 for the 20th time in a row, 3 units. Texas under 7.5, 2 units, and Milwaukee, 2 units. So I only found 4. And what I'm doing is I'm only going to talk about the games we're going to bet. And the bet is based on the pitchers. And if there's average pitchers with 4 or 5 ERAs, we don't know if they're going to throw shit. Because that's just been amazing to me. Guy has a 6 ERA throwing a shutout, and you're like, what the fuck is that? See, you get this in baseball, but you don't get it in football. Caleb sucks. He's always going to suck. You've got, Steve Young, who always sucks, and Trevor Lawrence, who always sucks. It's hard for them to have a good day, especially if you have a good defense going against them. But baseball it's up to the manager. It's up to the guy throwing strikes or balls, and there's a lot more that can go wrong. So that's why I like the Yankees under is sweet because they're not hitting. They started to hit the other day, but Max Fried was pitching, so it kept it under. And the pitchers we have are under pitchers. I don't even know who's pitching. I don't even care. It's the Yankees under. And you bet it until they go over. And then you decide. But you stay on the streak. You don't bet against the streak. Never bet against the streaks. Craps, blackjack, roulette, baccarat. Even in poker, if you're hot and you're hitting, keep playing. Even with the 3-7, you'll hit the 3-7 on the flop or something. All right, so that is it. So baseball, we've been very hot. Let's see how it continues. We got football. We're coming into July, and we know the training camps start opening up, and then we'll keep looking at the pros for injuries and who's going to start for Cleveland and other teams. And then we'll keep an eye on college. So I will do a Big 12. We got the Big 12 is now 16 teams. It's just unbelievable. So I'm trying to give you a good story of it. What's going on but I'm only, after 16 teams, that's an hour and a half, and I'm burnt out. So we'll do the Big 12 probably tonight, and then we'll get into there's the MAC, there's the Sun Belt. We'll probably do that at the same time, and then there's the Mountain West. There's really no more Pac-10. But I don't get these conferences, 16 teams, because you don't play everybody. It's not designed. I mean, it's like football, right? You got 4 divisions with 4 teams in the division. So everybody plays each other twice. And at least it's a fair, whoever wins the division is fair. This is ridiculous. 16 teams. Like, is Arizona State going to play Colorado? Probably not. I don't see how they can. They play how many conference games? 8, 9? If you're only playing half the conference. It's a big mistake making one big 16-team thing instead of 8 and 8, and then having you play everybody. They're getting away from that. Stupid. Anyway, that's all I can say. Good luck to everybody today betting baseball. Your gold, don't worry. It's the paper derivatives are I don't know what the hell they're doing. Gold and silver. Look for silver. What was silver at? I think 36.12 or yeah, silver's 36.12, gold 32.73. So look for gold, look for silver. I think it cracks like 37